Investors and traders, welcome to the channel. Today is 27th of January 2024. I hope everyone is having a great weekend. In this video, we are going to take a look at the key US tech stocks that we like to follow. As always, this video is for educational purposes only and it's not a financial advice. We'll start by taking a look at the Tesla. Uh, I did cover Tesla in a previous video, pre-open to the Friday market, and I will not go into too much details. We'll just reiterate a few things for Tesla. So this is the weekly chart of Tesla, and we can see that Tesla has been under pressure for quite some time. In fact, the top came in the July 2023 last year, and we have seen a series of lower highs and lower lows. And this is actually a flag formation, so you can draw it also like this. Here we go. And if I just copy this and we bring it down like this, so just moving in a channel, and we have this ABCD a little bit lower as well. But the key thing is we have got 61.8% Fibonacci retracement coming around $175 per share level, and we also have 1.272 at $175 per share level as well. And this should actually provide at least a bounce. And on the daily chart, what we also have is actually right here. Maybe I drew this a little bit differently, but we had 61.8% Fibonacci retracement coming around $180 per share level. And what we have seen last Friday is still negative close, a bearish close, but an inside bar. If this inside bar would have closed as a bullish candle, meaning a bullish trend, a micro bullish trend, that would have been much better sign. But it closed bearish or negative. And looking at this weekly candle, probably there is more downside in this. So watching $175 per share level really carefully, and below that 156 is where we complete this ABCD price projection. Unfortunately, what it also means is that what we were looking at was this ABCD, and we had this 30th of October 2023 low as our point C. Uh, since the market has moved below that, so that pattern is not valid anymore, and I've taken it out. However, if the market is likely to bottom around 175, or we'll have to wait and see. The target is still $350 per share level. Is kind of 340 to $350 per share level is still kind of still reachable per the bigger ABCD. If that happens to be some sort of we'll have to wait and see, but assuming that this comes out to be a bottom somewhere around here, so it's the bigger ABCD can still take us around there, and of course 348 is the 78.6% Fibonacci retracement. So we will have to wait and see whether this is just going to be a really extended um, pattern in which the market keeps on actually go and actually test this breakout area. But we have 175 and 156 pretty good levels to watch. Okay, we'll move on to Apple. This is the weekly chart of Apple, and Apple is just pretty much doing nothing over the last week. It did find good support the previous week, meaning the 16th of January 2024 week. It just needs to get above this $200 per share level, really in a strong closing daily closing basis, to be able to make a move towards $218 per share level. Otherwise, there's a possibility it just goes and tests this breakout area again. Then let's take a look at Microsoft. This is the weekly chart of Microsoft. Microsoft's a fantastic company. It is actually much stronger. The chart, our $400 per share level has actually been met, and the price is actually a little bit above. And if this positive momentum continues, then $433 per share level is the next kind of target for us, because that's going to be the 1.618 expansion of this entire swing here. So I'm going to move this around here for emphasis. Then let's take a look at Amazon. So the Amazon stock on the weekly chart moving towards the 78.6% Fibonacci retracement, coming in around $165 per share level. While we are taking a look at that, we'll also take a look at Shopify. This is the weekly chart of Shopify. It's also e-commerce related. And what we have is the market really consolidating around this 38.2% Fibonacci retracement. This was also our level. 78 to $80 per share level was our target, which the market met. Now there's a possibility maybe it just goes down and it actually pulls back a little bit right into this 38.2% Fibonacci retracement, and we have this 20-week moving average, because we also have this 200-week moving average right around this $80, $81 per share level, which is also giving a resistance, could be possible resistance. With two things coming together, there's a chance that perhaps this stock would pull back a little bit. And if then it begins to move higher from there, we have, of course, this one-to-one price projection, which could in fact see the price move towards 95 to $100 per share level. But we'll have to wait and watch and see. This 38.2% retracement with this 200-week moving average could be, a good resistance. Okay, let's take a look at Roblox. This is the weekly chart of Roblox, and here, again, in my opinion, it's just really consolidating. It's been in a range for a really long time, and there's a possibility maybe it's just gonna go and break out of this range and target $57, $56, maybe $60 per share level as well. And of course, we have the 38.2% retracement come in at $67 per share level for Roblox. It's related to Metaverse. And speaking of Metaverse, let's take a look at Meta. Oh wow, I mean, this is a fantastic stock, a fantastic story. Here we had this stock really plummeting. Even Facebook changed its name to Meta, and from the from the IPO lows to all-time highs, it retraced 78.6% Fibonacci retracement and has now retraced all of that. So this is the classic textbook V-shaped recovery, and now there's just really air above this, and this stock has potential to move higher quite a bit. And all these retracement that we were watching for, it has actually broken out of all of them, and that is a fantastic thing. We got really bullish this stock when it moved above the $200 per share level, which was about 38.2% Fibonacci retracement. The stock has done a really well. Maybe the stock is really strong, so maybe there might be a pullback that might come into it because it's really extended on the daily chart. Also, just broke above the all-time highs, previous all-time highs, to make new all-time highs. So there is a possibility there is gonna be some profit taking perhaps, and it just moves lower. But incredible recovery for this stock. And it's a really where Mark Zuckerberg began to pivot from its metaverse concept and how much he was willing to spend on the metaverse, to artificial intelligence, and that's something which a lot of people understand from a technical perspective. The new buzzword has been artificial intelligence in 2023, and with the kind of company and the amount of data that Meta holds, they can really do fantastic things in a good way with that. So I think that's something which the companies understand, the advertisers understand. So that kind of also led to the kind of recovery that we have seen, just in my opinion. Now let's take a look at Netflix. I believe the earnings were out for Netflix uh, last week. Now it's just moving towards 78.6% Fibonacci retracement, 585, just almost there. Then let's take a look at NVDA. This stock has been really great. Um, $500 per share was kind of where we're looking for this stock to maybe from there find some resistance and pullback, and that did happen, but it wasn't it was a pretty shallow pullback from $500 per share level. Just went into sideways action for a few months, And look at this, it's just like almost vertical move right to the 1.618 expansion of this entire no, sorry, that's let me remove this. It is an extension of this ABCD to the upside here. So this is where we are getting this from. So I can actually extend this one like this to make it easier to see. So yeah, $617 per share. Well, look at this vertical move. There's a lot of euphoria in here. When a stock begins to do something like this, where it just moves up really, really quickly, yeah, one has to be a little bit careful. Um, but this stock has done this before as well, and maybe the momentum might just carry it a little bit further. But from a pattern perspective, it has reached 1.618 of this AB leg, and yeah, I mean that's pretty extended move now. Okay, so what else we need to take a look at? Let's take a look at Zscaler. Wow, so the Zscaler has actually been doing a recovery, and it is above its 50% retracement, 1.272. If it carries up like this, although it closed a week, this is a doji candle. There's still a possibility excuse me, the momentum could carry it to about $265 per share level. But if we get like a follow through next week, a bearish candle, then looks like it might just come down and catch up with this 20-week moving average. The good thing is that for Zscaler, the momentum is really improving because the 20-week moving average is above 200-week moving average, and the price is above both of them, so that's pretty good. Okay, just trying to think if I'm missing anything. Amazon, we have just covered pretty much. Let's take a look at IBM. Yes. So IBM is a stock that we are keeping an eye on, and not in every video that I've been covering this, but in previous videos we have also looked at this. It's really an old company. It's the Big Blue, and it is doing fantastic stuff in the artificial intelligence area as well. And I think it's now beginning to reflect in the stocks price as well. And also some of the other artificial intelligence related stocks are really extended as well. So maybe the money is also going into these. Um, with this acquisition of Red Hat in the operating system and a few other things, IBM is running quite a few things which are really the backbone for IT infrastructure. So it's doing quite a few things. They have a new CEO come in a few years ago, so of course he's making quite a few changes. That's the kind of story Microsoft had in back in 2011-12 when Nadella took over, and of course whenever there is a new CEO, they come in with a vision, and that's a longer term vision, especially for the tech companies which are doing things for the longer term. And of course they bring in a lot of improvements to fulfill that vision. That's what we have seen really with Microsoft, with Nadella being the only third and outside the company's CEO in the company's history. So quite a few things may be happening here. So keep an eye on IBM. And we were initially looking for $175 per share level as the kind of the target, and not only that we achieved that, but exceeded that. So the stock does look pretty extended, but just from a pattern perspective, reaching about $240 per share level if we are able to successfully take out the old all-time highs reached in believe it or not quite a while ago, but 10 years ago. uh, yeah, $240 per share, it's something per the pattern formation possible. Okay, any other stock that I'm thinking that we normally cover? uh, Baba. Let's take a look at Baba. So Baba is actually not a US based company, but it is an ADR and it's listed on New York Stock Exchange. And it's a big Chinese e commerce related company, and they have some dealings in cloud side as well. I'm not sure how big of a market share they have been able to take, um, but they do have something there as well. So here, after quite a while, you can clearly see there is a downward channel formation here. So that's the trend line, and it's just been moving lower for quite a long time, since last year, early last year, January 2023, and we have had a pretty good close for the past week. So there, and we have also in the media heard some news about Jack Ma, the co-founder, buying some really big quantities of the stock. So there's more faith coming into this from big shareholders' perspective. Regardless of this, from a pattern perspective, the price is above the 78.6% Fibonacci retracement. One thing that I had actually pointed out in the previous video as well, this stock likes to do double bottoms like this, and maybe it was a double bottom or close enough a double bottom. So this is what it is. I think we have covered quite a few things. So here what we'll be watching for is the break of this trend line, and then of course this swing high, which is around $88 per share level. Once it gets above that, I think 103, and then these, especially $120 per share level, that's going to be a key. If it's able to break that, then in my opinion, the stock is likely breaking out to the upside. So thank you very much for watching the video. Good luck and good trading, and have a fantastic weekend.